After all the effort you put into your business, the least you can expect is to be paid for the work you do. Unfortunately though, many small businesses genuinely struggle to get paid on time, with only around half being cash flow positive month to month. I'm Faye Watts. I'm one of the founding partners at Fuse Accountants, a UK-based accounting firm, and we're passionate about making financial and business advice more transparent and easy to understand. In this video, I'll explain how to review the fundamental processes that affect the flow of money into your business. Get these foundations right and you'll notice a big improvement to your business cash flow. Now, I think that the business world has an underlying issue with late payments, to the point that it seems culturally acceptable. In fact, research by Xero shows that the average 30-day term invoice is paid 10 days late. However, let's be pragmatic. You might not be able to change people's behaviour overnight, but you can certainly change the process in your business to improve your cash flow today. So, here's a few of my top tips. Invoice on time. Get your invoices sent out as soon as you've done the work. Your customer is much more likely to pay you on time while the good service you delivered is fresh in their memory. So, be disciplined and don't delay sending out your invoices. There's no reason to feel bad about promptly sending your client the bill for the work you've done. Make sure they understand who's going to be sending the invoice and when to expect it. Include all necessary details on your invoices. You can waste a lot of time going back and forth with your clients about missing details and clarifications. Ensure to include all necessary information on your invoices and ensure there is no doubt for them what the invoice is for. Make it clear when you expect to be paid, and ensure to include the specific date the invoice is due. Don't just leave it to your client to work this out based on your payment terms. Find out who pays the invoices. By getting to know the people who sign off invoices, you can let them know how important prompt payment really is to you. You can even ask for a billing contact up front when working with a new client, and then you can get your invoices sent straight to them in future, ultimately stopping your invoices getting lost in transit. Find out when your client runs their payments. Not everyone will have a great payment system, and it's more than likely that your invoice could be buried in somebody's inbox for weeks. So for this reason, it's really useful to know when your client does their payment runs. Many businesses will make their invoice payments on a certain day of the month, so work with your client to find this out. Not only will this make you seem efficient, it ensures that your invoice reaches them at the perfect time and you'll be top of the list to get paid. Ensure strict payment terms. Be really clear about what your payment terms are and when you expect to be paid. You should be prepared to introduce a statutory interest charge if you wish, and let your clients know about it as part of your terms. Also, don't be afraid to invoice up front for services, materials and other items wherever possible. A lot of businesses done a mutual trust, but remember that you aren't a 0% interest overdraft for your customers, so don't let them exploit your credit terms. Change the way you bill your customers. If you have the kind of business where you invoice at irregular intervals or even just once a year, it's likely that your revenue is equally uneven. So you can look to smooth out your cash flow by changing the way you bill your customers. Consider switching to a regular monthly fee, such as a retainer, subscription or a package charge. And this also simplifies budgeting for your customers too. It means that they can spread out the cost of paying you over several months, whilst you benefit from dependable monthly income. If you do this, I'd recommend using a pull-based payment method like GoCardless to automatically collect payment from your customer when it's due. This makes it far more likely that you'll be paid on time. Dealing with late payers. For some, it's never a top priority to pay you. Others get lost in inefficient processes, while others still will deliberately delay paying you if they think they can get away with it. So firstly, make sure you can spot them. You or your bookkeeper or accountant should be keeping a close eye on the money coming in. Run regular reports to identify outstanding debt so you can proactively chase the late payers. Whatever the case, prevention is better than cure. So wherever possible, ensure your customers are signed up to payment methods such as direct debit via GoCardless. This way you're in control of initiating the payment and you can collect what you're owed directly. This is great for you, but it also means the customer doesn't have to do anything in order to pay you, which is one less task they need to worry about. If you have a consistent late payer, consider requesting payment upfront for future work. There's nothing more frustrating than continuing to work for someone who does not pay you on time and does not respect your terms. Remember, it is your choice to work for a client, and if a client is consistently late in paying and costing you time and energy, you may want to consider whether you continue working for them, as a bad client can be so detrimental to your business. Hopefully I've been able to show you that there are many simple but effective changes you can make to improve your cash flow foundations. Remember, taking control of your cash flow comes down to accountability. As long as you and your customers have a clear understanding of who is responsible, what needs to be done and when it needs to happen, then you're bound to see the impact on your bottom line.